Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, January 23rd at about 12:30 p.m. Eastern. Well, the S&P 500 is little changed today after the index posted back-to-back gains on easing geopolitical fears. Shares of NVIDIA and Advanced Micro Devices rose more than 1% and 4% earlier in the day, respectively. The moves came as the word came out that NVIDIA CEO Jensen Huang is planning to visit China in the coming days. Intel shares, however, tumbled 15% after the chip maker reported a disappointing first quarter outlook. But all in all, the major averages have rallied for a second session as investors were appeased by news of easing trade tensions and geopolitical risk. So on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. And we follow this, the moves of the SPDR, of the SPY, because as traders, we want to know the mood and manner of the market, and this is certainly the benchmark that does that for us, that tells us what it is. Now, today when I captured this chart right here, the SPY was trading at $689.95, just below the all-time highs set earlier this month at $695. We know here that it is sitting right atop the red line, sitting right atop its 20-day moving average, the red line, which is coming in right under price at 688 and change, and the 50-day moving average, the green line, is down here at 681 and change, almost 682. We also can come down here for the third major moving average, $636.97. Let's just call it 637. So we know that, and you can't see it on this, the whole thing on this chart, but we know that for the past 10 months back into April, the SPY has been walking up its 20-day moving average for the most part without dipping very much below it. It rebounded off of its April lows. Everybody had an April low. The SPY rebounded off its April lows at 481 and then traded in an uptrend, really nice uptrend here, higher highs and higher lows, until it hit its all-time high back here in October at 690. That was a 44% gain from April lows to October highs, pretty darn good. After the October high, this long-term rally started showing signs of fatigue, falling to 652 down here in November, then rallied once again above the 50-day and the 20-day, and came back up here, right up here, then back down below the 50-day, but only for one day, then rallied back up, back up to where we are, back up here to 695, the all-time highs, and down to where we are at 689 and change. Now, we know going into next week, which is going to be very, very, I would imagine, very exciting. We've got a lot of tech companies coming out with earnings next week. We also have the Fed announcement next week. So as we look at this chart, we can see here also, if you just kind of back up in your seat a little bit and look, you can see we had a very strong uptrend for many, many months. And we need to remember that the markets of industrialized nations move in cycles. So you can see, and if you could see earlier on this chart, back a few months earlier, it's a very orderly move to the upside that went on for many months. You can see here that it started like, whoops, profit taking came in, then it made the new all-time high. We got some more profit taking come in, much bigger moves than we'd seen in the prior months. So now we're still above the 50-day moving average. That's important. We can see, though, that it is now becoming more of a struggle to stay above it than it was 3 or 4 months ago. So we want to keep that in mind. And markets don't go straight up forever. And as I always say, and they don't go down forever, please God. So, but that's how they work. They move in cycles, so we need to remember that. So resistance now sits at the all-time highs at 695. Price support and moving average support sit at the 50-day moving average at 682, 681, 682. We can go down here to this low in December, to this low down here at 671. And then, of course, we have the November lows at 652 and the 200-day moving average potential support at 637. So again, we have Meta, Microsoft, Tesla, Apple earnings and more coming out next week. Plus, we have the Fed announcement on Wednesday. And I like the old saying, the old trader is saying that I remember just now, that comes in handy at times like these. Trade what you see, not what you think will happen. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. The Qs follow the NASDAQ 100, which of course is the top 100 non-financial stocks in the NASDAQ stock market, including the large cap momentum stocks like NVIDIA, Meta, Alphabet, Tesla. Now, when I captured this chart, the Qs was trading at $624.02, still below the Qs all-time high in November at 637. Now, the Qs here are still trading above. Right here, you can see the 20-day moving average coming in at about 620, and the 50-day coming in the green line at 616. And the 200-day moving average down here is at 569. Now we know, and you can't see it on your charts, that the Qs made a April low at 402. Then they nicely walked up the 20-day. They're always more dramatic than the SPY because it's got so many momentum stocks in it, so many tech stocks, much more dramatic than the spider. But it did it. It walked up the 20-day moving average from the April lows up to the October all-time high. And from the April lows to the all-time high was a 58% rally. Pretty darn good. Now, from the highs at 637 here, the Qs dove down to the low of 581 in November. Technically, we could say the uptrend was over because it made a lower low, but we're going to have to forgive it because it bounced up really fast, rallied, went back up toward the 50-day over the 20-day, moved up here to 628 in December, then fell to 600, but that was a quick day, a quick down, and then rallied back up to its 50 and 20-day moving averages, then kind of walked along them, fell a bit lower this week, but give it credit, struggled back up to where we are now at 624. Now, if we want to here, we can draw trend lines. I drew one last week and said this is a triangle and pretty darn close, and actually price fell out of our trend lines here, the trend line in the 50-day, but only for a couple of days and came back up. So maybe we'll have to move this line now in order to accommodate this. We can move it down here, but just know that a little bit of profit taking is definitely coming in here, and we have to see next week if the Qs, if the big tech companies can continue to move as they have been. Most of them been going up, some of them been going down. We're going to have to see what these earnings come out with. So we know we have resistance here at 628, 637. We know we have support at the moving averages down here at 616, 617, down at 600, down here, down at 581 down here, and certainly at the 200-day moving average at 569. So it's definitely going to be an exciting week next week, so stay tuned and trade carefully. Our final chart today is one we haven't looked at in a long time. I will admit that I am fond of being in non-momentum stocks, I'll call them, when we're going through earnings season like we are now. I like to just I like to move out and go to another area of the market to see if it's a little more calm. So that's what I'm looking at here. Plus, there's some good news here. So we are now looking at a daily chart of the Invesco Food and Beverage ETF. The PBJ is the symbol. It has 30 holdings. Top holdings include Monster Beverage, Cisco, PepsiCo, Hershey's, Kroger, and Kraft Heinz. And I looked at a lot of those. Actually, I looked at all of those stocks, and by and large, not 100%, but by and large, I can see where the PBJ could potentially have some good upward movement in the next few weeks or months. So when I captured this chart today, the PBJ was trading down here, right down here at $46.60, and it's trading right above here. I don't know if this is the black line's the 200-day moving average, and the reason it's trading above that and the other two are inverse is because, and we'll talk about it in a minute, is because price had come down so low that it had fallen below all three moving averages. And when that happened, the faster moving averages, the 20 and the 50-day, followed price as they always do, much, much faster than the 200-day. So the moving averages are a little bit inverse here, but I don't think it's anything to worry about if this keeps going the direction it's going in. So when I captured this chart today, again, the PBJ was trading above its 200-day moving average, which is coming in at $46 and change. And again, his price is just above this at 46, 60 or 50 I'm looking at. The 20-day moving average, the red line's coming in at $45 and change. And the 50-day moving average, the green line, is coming in at $45.08. So what the PBJ, you can see back here on the chart, look left and up with me. The PBJ made a high in July at 49. Then it went sideways for a little while. Then it gradually drifted lower all the way down to this November low at 42. Then it rebounded back up through its major moving averages, back above the 20-day, the 50-day, back down to the 20-day and 50, trying to get up over that 200-day moving average. Couldn't do it in November and December. Came down here to 43 and change in December or January, just barely January, and then rallied up strongly. And I've seen that a lot in these consumer staple stocks. I've seen that move a lot. I know some of it has to do with a Costco run. But anyway, it looks like it's gaining strength right now, or it is gaining strength back up to where we are now at 46.60. In the coming week, if the PBJ can stay above its 50-day moving average, and that's at $45.08, call it 45. So if the PBJ can stay up here above the green line, the 45, coming in right now at 45, the 50-day moving average, I am definitely going to buy a small position of the PBJ in my trading portfolio, and I'm going to put a stop in down here at $44.75. If and when the PBJ can rise above, back up here, if it can rise above 48.50 and close above it, if I can draw a straight line, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the PBJ in the coming week. And now, as you all know, at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, in the beginning of the year is a really good time to do it. Now is a great time to check out my timeless training programs. How to swing trade successfully, and that's right here. How to swing trade successfully is definitely one of our most popular programs. People love it. Shows you how to enter during upswings, grab the sweet spot from a price move, and pocket your profits before price goes lower. So what I'm talking about here is if you're looking at price going higher, and we just looked at a chart, when you're looking at a daily chart of a stock in an uptrend, and you can use other times, but I'm talking about a daily chart here. What we teach you to do in how to swing trade successfully is when to get in here, and then when you get what I call the center out of the Oreo, you take that, and when it starts to look like it's just going to fall a little bit, then before it does that, you get out. So whatever this price does here, you're good with it because you grab the center out of the Oreo, and then you wait for another one. You're going to discover how to trade with my Sleeping Tiger setup and use it over and over again to make consistent profits. It's what I use every day. Our new low price for this program is only $187, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever popular 7 Steps to Successful Trading, which is our flagship product, really good if you want a big overall training on how to trade successfully. Of course, how to swing trade successfully, trade the trend to profits, how to read charts, 3 winning setups, great for short-term traders, how to bottom fish like a pro, definitely one of my favorites. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you're going to have unlimited access to learn at your own pace. So be sure to check them out by going to the link on the screen, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.